Well, it's not quite turned out as bulls would have hoped for because we are, I mean, it's not curtains, but really if you look at the intraday, we're significantly off from the highs of the day. I mean, just look at, for example, while the market breadth is still even Stevens, look at this Nifty chart and look at how we are trading. And while the advanced decline ratio is still even Stevens, look at that. I mean, one is still in favor of the advances, but the PSU banking index has taken it on the chin. And how? I think if you look at earmark one key thing that stood out in trade today, it's the PSU banking space. Look at the kind of falls that have come into almost all of those names, led by Canada, but BOI and SBI too has corrected quite significantly. So this is the bucket of problem for our markets. But the market breadth is still okay, which is not a bad thing. And if I highlight the Nifty 50 names, should come up on your screen. A lot more red than what it was at the start of the trading day. Autos have come off, even if M&M is doing okay. The likes of Maruti, Tata Motors have all corrected in the session today. Adani Enterprises is down. SBI, as we discussed, is down as well. Stocks like Power Grid and Dr. Reddy's, no apparent reason but have corrected. Not too many winners save for technology by virtue of what's happened globally. So Tech Mahindra, LTI, Infi are in the green. Bharti continues to be in the green. And yesterday's top loser, HDFC Bank, is about 1% higher. So it's HDFC Bank on one side, PSU banks on one side. Effectively, that's the equation for the markets today. But yeah, Tamanna, suffice to say, at least didn't turn out the way I thought in the morning, didn't turn out the way a lot of bulls would have thought, considering what's happened in the US markets and the Asian markets.
Absolutely. One figure that I'll put out there that may be relevant to the market is 66.95%. What is this? This is the average voter turnout of the first four phases. Election Commission of India put out that figure just a short while ago to drive home the point that there hasn't been a low voter turnout. If you compare it to 2019, that was a 67.10% figure. But for all the phases, this is just still phase 4. So that's the push and pull largely. If I were to try and understand what is the underlying sort of question mark in front of the market. We've pulled up the Nifty mid-cap 150, relatively doing better compared to the front line. The front line may be pulled down by the heavyweights in the public sector banks, so maybe that's why you're seeing slight, red on the Nifty. I want to pull up the small cap index as well and look at what's happening there. That's also about 0.5% up. Let's pull up India VIX for a second and just see what the mood of the market is sort of indicating right now, and not too bad, but still 1.5%. Let's cut across though to the story of this afternoon, which is Mahindra Mahindra. The press conference is on where they're talking about the numbers which have just come in, largely in line. Let's listen in.
Strong performance yet again. Standalone PAT is up 48%. Consolidated PAT is up 25%. This is despite various challenges. You heard about the stresses in the farm sector that we've seen from an industry perspective. Tech Mahindra has had a year where there was a number of things done to clean up and set the business well on a future path, and therefore Tech Mahindra profit was down 52%. But we've stayed on our course, and we've delivered across the group, in fact, more than delivered in terms of the numbers. And beyond the numbers, there were a number of actions on living our purpose, actions on sustainability, where we won many accolades, but more importantly, we've done some very meaningful work. Here I want to highlight that we've achieved EP 100 for our auto and farm businesses. EP stands for energy productivity, and what EP 100 means is that we need today literally less than half the amount of energy required to produce a similar number of automobiles and a similar number of tractors as we did at a baseline in 2009. Literally half the amount of energy. So when we talk about renewable energy and a cleaner world, this is in many ways even better. You don't need renewable energy. You don't need half the energy. And that, in fact, is a significant saving. So this is one that has been recognized by many forums around the world, and just a tremendous amount of effort that's gone into it over the last 15 years to be able to get to this point. And may I also add, this is 6 years ahead of target. We are targeted to be EP 100 by 2030. We are 6 years ahead of this target. There's a lot of work on women empowerment. And just recently, you may have seen the news around the drone Sakhi program, which is a Prime Minister's initiative that we are supporting, and with the Ministry of Skills and Education and with the Rural Development as well as Agri Ministries, we've created a program to train women to operate drones in the farm sector to help with agriculture and to help with their livelihood. And that's one of the many efforts we're doing on the women empowerment front. There's also meaningful progress on what we call being future ready. This is around talent, a very strong leadership pipeline, and we've enhanced that by a series of rotation programs that we've commenced across the group. You've heard about some of that in the past, around the leadership programs we have at entry level, mid-level, senior level, and these are some of the best programs across companies in the world today in terms of how we operate them in partnership with some of the top universities in the world. And technology, we've been an early adopter, a leader across many areas. We talked about metaverse earlier. In Gen AI today, we've got a very large number of applications across different businesses, and these are applications that are making a real difference to productivity in the businesses, to customer experience in those businesses as well.
Well, M&M did a few things right, slightly ahead of estimates, which is why that stock is holding out while some of the other auto stocks are just not. And we should try and get in Mahantesh Sabarat to talk about these numbers as well as the other auto pack. But Rajesh Palvia is with us. He's SVP Technical and Derivative Research at Axis Securities. Rajesh, great having you as always. Thanks for taking the time out. Before we talk about the market at large, since we've just come out of M&M and since autos seem to be amongst the key movers, how do you look at Mahindra and Mahindra? And then parallelly, how bad has it been today for the likes of Maruti?
Good afternoon, Niraj. So,
Good afternoon.
M&M, yes, clearly it's in bullish trajectory. The way stock is moving up, stock is holding above all its important moving averages. Stock is continuously forming higher top, higher bottom formation on daily as well as on the weekly chart. Stock is moving in upsloping channel. So these all parameters are clearly giving us sign that we could see furthermore, upside from here onward for M&M. If you get any opportunity in this kind of volatile market towards 2290, 2260 kind of zone, it's again, a good level again to enter in the stock in the decline also. So buy on dip should be your strategy for M&M, and possible upside target we can see towards 2450, even 2500 also. So this stock one can hold on. Even in the minor dips, one can add the positions also with stop loss of 20 to 40. If I look at the Maruti structure, there is some corrective move is happening in the stock. But still, if we analyze the near-term, short-term structure, stock is in correction, but stock is now trading near to its important support area of 1200, 250, 1200, 300, 12,300 kind of zone. So if it manages to hold about 12,300, then possible pullback we can see again in Maruti, as whole automobile stocks are showing good traction in terms of buying, and most of the automobile stocks are almost trading near to their all-time high trajectory. So I think outperformance is likely to be there in most of the automobile stocks. So this decline should be used as a buying opportunity in Maruti. 12,250 should be your stop loss to buy Maruti in this decline. On the higher side, 12,600 if it crosses those levels, then possible target for Maruti we can see towards 12,800 to 13,000 also.
So that's the story with Maruti. Maruti down today, Tata Motors down today, M&M barely holding on. Actually, all right on the back of numbers, largely in line, but nothing fantastic, to be honest. Gail is the one that we should talk about. Gail numbers are looking poor. And just pull up the intraday, because you're seeing that stock having taken a bit of a tumble. If you see the full day's chart, that slide down in the last couple of minutes. Revenues down 5.6%, EBITDA down 8.6%, your net profit down 22.5%, and margins have also dipped, gone to 11.7% versus a 12.1%. So Gail there seeing a bout of pain. Rajesh, what do you make of a Gail right now? So it's taken a bit of a sharp downturn, about 4.5% down in the last few minutes or so. But do you see potential for an upswing here? Would you buy right now?
Tamanna, this is third consecutive week where we are seeing, stock is under, selling pressure. Some profit taking is happening in the stock, but long-term structure for the Gail is also bullish. Stock is now almost trading near to its 50-day moving average, which is placed at around 190-91 zone. If it slips below to 190, then there could be another round of supply pressure we can see. In the derivative data also, there is a short built up in today's session, almost 3% addition of the open interest on the short side. So 190 is the critical level, though there is a reaction to the number. So I think if it slips below to 190, then one can open short position, and then possible down move can extend to 186, even 184 kind of zone. But at this moment, I think I'll avoid at this moment. If it breaks below 190, yes, then there is an opportunity to go short.
Okay, so go short if it breaks below these levels. That's the story of Gail right now. Disappointing numbers, and you're seeing a sharp reaction immediately. But let's come back to M&M. It's the buzzing stock this afternoon. And Puneet is joining us, who's been going through all the details of its Q4 numbers. Now, Puneet, is this largely in line? On the face of it, the consolidated numbers seem to have beaten estimates, at least on the top line. But what's the fine print telling you?
Yes, that's right, Tamanna. So this number will be called in line. There was a key notable in the numbers, which was the tax write-back, which has come at 648 crores for this quarter versus 335 crores of tax write-back in the same time last year. So that 300 crores, which looks like a beat on the numbers, but it's actually in line because the estimates were roughly of 1800 crores of PAT, and that's come in roughly at around the 2000 crore mark. So let's look at the other numbers as well. Revenue is up 13%, coming in at 25,000 crores versus 22. The estimates of roughly 24,000 crores. So revenue slight beat on that part. EBITDA as well has done very well. It's higher than the Bloomberg estimates of roughly 12.7%. It's come at roughly 13.5%. So strong operating leverage playing out here. While on net profit also, as we just spoke about, the tax write-back was one of the key additions which helped the profit look as a beat on the consolidated basis. But there was this tax write-back of 300 crores additional from the last year, which helped it go forward. They've also announced a dividend of 21.1 rupees in this particular quarter, and also we have pointed out this earlier that the new compact SUV, the 3XO, has already garnered 50,000 units. When you look at the segmental performance, the automotive has done really well, coming at roughly 19,900 crores. This is above the last year's number of roughly 16,500 crores as well. And so is the farm equipment business, has degrown by 10%, coming at 5,200 crores of revenue versus 6,500. Now, there's one of the major updates that the company has given, which is an investment in Mahindra Elective Automotive Limited, or MEAL as they call it. Now, they have said that they've approved an investment of 12,000 crores in this EV entity of Mahindra. This is to fund the EV journey for the next 3 years. Now, they are expecting to generate sufficient cash flow over this particular time frame and are not expecting to raise any more capital after this from whatever earlier has been announced. Do note that BII, or British International Investment, is one of the key investors in this entity. They have mutually agreed to extend the timeline of the 725 crores that investment that BII was going to do this year. They have extended to and see by 31st December 2024 when can that money come in. Also note that Sensex has invested roughly 300 crores in this particular entity, and roughly they will be investing around 900 crores more. So 1200 crores from Sensex, 1200 crores from BII. That's the overall over the next 3 financial years for MEAL in general. We also talk about the sales in quarter, but I want to highlight one more key fact. For the current press meet is on right now. They have said that the automotive division will invest 27,000 crores over the next 3 financial years till FY27. And just one last fact, the MEAL capex of 12,000 is included in this fact.
Right.
Back to you.
All right. Thank you, Puneet. Puneet has clearly gone through all of those details.
That's a large number, Tamanna.
Sorry?
That's a large number. If they are wanting to invest 27,000 crores in automotive, that's a large number.
Yeah, that is a large number, and that perhaps is showing the big bet that M&M is making right now. Even their EV bet is very, very, strong. So
yeah,
they are focusing on that. And from the conversation we were having this morning as well, Niraj, in terms of why OEMs is a bit of a question mark, because nobody knows who's going to win that EV race and that transition. Is it going to be a local player? Would it be, the ones that can now come into India?
Yeah.
so on and so forth. So that's made the entire situation a little iffy. So maybe that's why you're seeing even a Tata Motors top of the pack right now in real terms in electric vehicles. But can you stay there for BYD, a Leap, XYZ, maybe even a Tesla at some point all come in? What happens then?
Yeah.
And M&M really could come in and steal the game. They've been very, very focused on it, and they've been a player who's always said we're going to have a born EV. We build it ground up from scratch. But frankly, more than M&M, I'm excited about HAL this afternoon because the Q4 numbers are stellar. On all fronts, a beat, net profit up 52%. That stock is up 8% now. So obviously reacted sharply to the numbers. Anushi has been going through all the details. Anushi, what has led to this boost this quarter?
Right, Tamanna, so if you have to look at the numbers, again, 18% of a revenue growth, strong growth over year for Hindustan Aeronautics, but it's the EBITDA and the margins that is clearly a standout over here. About 81.8% of a growth in terms of EBITDA, while margins have shifted from 26% to 40%. Like a couple of factors in play over here. So despite the cost of raw materials going up by over 30%, it's the reduction in employee benefit expenses along with purchases of stock and trade reduction that has led to this kind of margin expansion that we are looking at. Even the changes in inventory is another factor that has supported this kind of margins we are looking at. Profit, a result of both the revenue growth and the EBITDA growth has resulted in a profit growth of about 52%. But apart from that, the company, if you look at the operational update that it came out before this, earlier this month, if you look at the order book of that, so that now the order book also at the end of March, it stands at about 94,000 crore. Which showcases about a 14.6% growth from last year. So strong order trajectory going forward, which is going to be supporting the medium term to near term revenue growth as well. Recently also there was a UBS upgrade for this stock, wherein they have seen about they are targeting about a 32% of an upside for this, seeing the kind of order book that they have and see about a 4x order book growth over the next course of 7 to 8 years. So strong projections over here as well, which is going to support the revenue growth also going forward. Along with this, even the government push to improve HAL's execution capability and focus on its profitability also stands out, another factor that we should be watching out for. So these are some of the key takeaways that we are finding in Hindustan Aeronautics supporting these kind of numbers that we are looking at.
Okay, so HAL numbers are good and the street is rewarding it already. A stock that has run up massively.
For what numbers?
What numbers? But I mean, come on, you have a Make in India play in its full glory over here as far as defense is concerned, and HAL really on top of that pack. Rajesh, would you still buy an HAL right now at 4553?
There is no stoppage for HL. The way stock is moving, minor dip, then again, really. So the same kind of behavior which we are seeing in the stock since last so many months. I think, yes, one should hold on the position. If you get any dip towards 4,500 or 4,450 kind of zone, that's again, level to re-enter in the stock in any minor corrective move. But I think those who are already holding, they can hold the position. Keep trailing stop loss at around now 4,400 possible. Rally can extend towards 4,700, even 4,800 kind of zone also. Because again, if we look at the data also, again, despite of very sharp run up, there is again long built up in today's session, almost 8% open interest addition, which we are seeing for the day. So I think the way stock is showing the traction, so nobody wants to exit from the stock, and everybody is buying the stock. Whatever minor dips which we are getting in this defense theme, I think most of the defense stocks are behaving in the same manner, but HL is the clear outperformer in this segment.
Okay, Rajesh, stay on. Lots more to talk about. We need to slip into a break. I must mark the index though, because I think from being in a slumber, I think there's just this bit of a pull back in the Nifty as well. This is volatility at its best. And we were talking about how, at the start of the show, we were talking about how the thought around what the index will do didn't quite fructify as well. Suddenly you see the index doing what it is doing right now, and it seems quite stunning. If you can just pull up the top contributors on the index before we take that break. And maybe it's HDFC Bank which is leading the charge higher, though it was in the green. But if you can pull up HDFC Bank intraday, I wonder if that is the reason why the index is also getting pulled up a little bit. Or an Infosys. Yes, HDFC Bank has inched up 1.2 versus 0.75 at the start of the show. And I think Infosys or Infi should come up. I wonder if that is also playing its part. But about a couple of percentage points there. Take a break. Come back and talk about this Nifty move. Very interesting Nifty move. And of course about some other pertinent topics as well.
You've probably all seen a viral clip today of a question being asked to the finance minister about the number of taxes that brokerages pay. And the question actually went viral. The answer also went viral because it's touched a raw nerve for those in the markets community, all of us who are watching and presenting this show. The reason is the number of taxes and transaction costs which go along with any trade on Indian equity markets. And I'll just pull those up for you, the kind of charges you pay. So you have, of course, a transaction cost which you first pay the broker. That's the broker commission which comes in. Then you have an STT, CTT, okay, which is a 0.1% on buy and sell for equity delivery. If it's an intraday, it is 0.025% on the sell side. Now, you also have a transaction charge, which at the end of the day, the exchanges take. That's the money the NSE and the BSE makes. And then you have a GST, which is 18% on brokerage and SEBI charges and transaction charges. That is for equity delivery, same for intraday, etc. You also have a SEBI charge, which is 10 rupees per crore, stamp duty that you pay the state government, depending on which state it is, and it will be different. And then you have a capital gains tax, which is a short-term and a long-term capital gains tax. Now, this really is at the core of the issue and why perhaps you've seen this video go viral. Deena Mehta is joining us now to speak about this. She's a Managing Director at Asset Mehta. Ms. Mehta, thank you so much for speaking with us, and great to have you on NDTV Profit and to speak with you after such a long time on an important issue. Yes. Let me understand from you why this has become such a pain point, because at the end of the day, when transactions grow in volume the way we've seen over the last several years, it's not as if brokers are not making money either.
Let me tell you, the taxes which we pay, it is far more than what income that is earned by the broker. Sometime back, I had done a 10-year study of my company only, and what I paid taxes in various forms is at least 10 times my earnings. And what is another important thing to note is one more thing you have missed out, is that if a broker were to, transfer his membership, if he were to die and it was a case of transmission, then there is a transmission charge which is to be paid to the SEBI for the purpose of transferring the assets to another person. And another charge you have missed out in this, and that is paid to the depository. Because you also have to pay to the depository whenever there is a transfer of your shares happen. So that you have not considered in this, because every time there is a transaction, there is a transfer involved and there is a payment to be made to the depository. So all these things put together, it is actually, and brokerages are collection agencies. If you see, all these taxes are collected by the brokers and paid to various agencies, be it government or be it SEBI or be it the exchange or be it the stamp office. So I feel that as a collection agency also, you have to keep accounting of so many things, and it is a thankless job because if there is any error in collection, you may be penalized, and there is no reward for making such huge collections for various agencies of the government. So I feel that this is one industry which is very, very heavily taxed, and I'm sure you have also not included in this dividend tax. That was one of the things discussed that day, that, the company earns a profit, it pays tax on that. Then it wants to declare dividend, they pay tax, there is a dividend distribution tax.
Right.
And when it's in the hands of the investor, again he has to pay a tax. So many levels of taxes which are there. I think there is a need to take a hard look because if we are talking of a $5 trillion economy, definitely it is the companies who are going to play a major role. It is the investors, mobilization of household savings into companies and into the economy. All these things are going to happen. So investors are a backbone, and we should not make investing.
Deena ji, I get your point completely. But if I were to play devil's advocate, every segment is taxed. Then your salary holders will say we are taxed even further. On any gains you are taxed. Why would you want special treatment for the investing community? I mean, a devil's advocate question to you.
I am stopping at having investments in financial markets. I am once I have invested in financial as a citizen, I am same as any other citizen who is a salaried citizen. But selecting this class of asset, that it is equities, and if you select this class of asset and you invest through the broking business, through the secondary market or primary market, then the number of taxes which are there are not there in investment in any other class of assets. If you buy a house, all that you pay is a stamp duty for the purpose of transferring the house. The number of taxes which are levied over here, I think over the period have just got added, and especially if you see STT, I was one of the persons in the front line when Mr. Chidambaram put STT, and at that point of time STT tax was given as a rebate, but over a period of time it has become an expense. So the extra taxes being charged, the mode it is being charged, and how it is treated for taxation purpose, all these have become harsher and harsher over a
Right.
period of time. So
Okay.
all I am saying, to compare other asset, this is a very unfair treatment being meted to equity investments as a class of asset.
I'm sure this voice has been heard with the kind of response to that one question that was asked. Thank you so much, Deena Mehta, for speaking with us today. Looking at the kind of interest coming in equity markets, there's no real trigger or reason for any one in power or in government to change that, because people are still investing no matter what. But thank you, Deena Mehta, for speaking with us. Let's turn our attention back to what's happening in markets right now, and the kind of change in mood, Niraj, that we've seen in the last couple of minutes in the Nifty and the Sensex, isn't it? Sharp recovery over there.
So heartening to see from a bull's perspective, because frankly the template seems to be of optimism, and across the Asian boards we had this. Rajesh, you are here with us. This sudden upsurge now, how are you playing this, if you're playing this? Because it's also not just that HDFC Bank and some others have gained, but also the stocks which are losing out have reduced the losses. The likes of Maruti and some of the others have reduced the kind of cuts that they were sitting on.
Well, I think, Niraj, yes, it's a broad-based buying again, took place in the market, and the way Nifty has recovered smartly and now again comfortably holding about 22,300. So that giving us confidence key on expiry day. Most of the call writers now are forced to cover their position, as in the initial dip is now recovered, and the short covering action is taking place on the Nifty. So I think this really can extend further. 22,450 could be the next level where we can see Nifty spot to continue this momentum. I think a lot of pocket we discussed on the M&M, and now M&M is also trading at its all-time high or a day high trajectory. Even on the pharma also we have seen good traction in last couple of minute. And I think most of the pharma stocks like Cipla, Sun Pharma, Lupin, these all stocks also started moving up. Kotak Bank is also contributing. I think this is a broad-based buying action. Most of the stocks which were consolidating since last couple of trading session, they have also started as short covering is taken place in the Nifty. And I think this really can extend, and maybe possibly we can hit 22,400 level also in the today's session itself.
And I'll get in Agam to talk about this in just moments from now, but the point is that short covering, and if this extends itself, then I thought the maximum positions were slated at around 22,500, 22,600. So that's the interesting point. Can we go to Agam, or should we do that after a quick break is the key question. Okay, we can go to Agam, I'm told. Agam, Rajesh is saying that there is a bit of a short covering move that is going on. Quick thoughts here, Agam. What have you seen in the last 15 minutes on the derivative side?
Absolutely. So firstly, there were a lot of shots around the 22,200 calls, 22,300 calls. A lot of those call writers have run for cover over the call. And of course, the Nifties are also at a 6-day high. So, it's the highest level since the last 6 days, which means a lot of those positional shorts are also being covered at the moment. And with that said, of course, a lot of expiry trading is happening at the moment, and which is why we're seeing that sharp up move. A lot of that is to do with that expiry. We don't see too much traction as far as the futures are concerned. The Bank Nifty futures, again, not as much going on there as well. But I want to talk about the options market essentially, because that's where we're seeing most amount of traction. So when it comes to the options market in today's day of trade, a lot of unwinding now starting to come through around the 22,300 and 22,400 calls as well. Of course, 22,200 and all those who had written that, they've all been forced out of their positions this in the last 15-20 odd minutes. Of course, finally coming down to your stocks, and that's where you do have some substantial amount of traction, but a lot of longs in Balakrishna Industries, Oberoi Realty, and M&M, of course, reacting well to the numbers, and among stocks which are seeing unwinding. Let's pull that list as well. And that should come up for you on your screen. Well, we do have short covering for Granules, LIC Housing Finance, PVR, Inox, and Birlasoft. But all in all, the sharp up move that we've seen in the last half minutes, a lot of that, in fact, a majority of that, can be attributed to shorts being covered.
All right. So you are seeing an action-packed afternoon session, I must say. What was looking like quite a somber kind of a trade, leaning negative territory seems to have turned around very, very quickly, and M&M might be one of those reasons. We're coming back with a more detailed analysis of M&M after this very short break. Stay tuned. This is turning into an exciting closing session. Don't go away. Right, welcome back. You are seeing a turnaround in markets, and M&M is on top of that list. If you pull up the Nifty gainers today, M&M, Bharti Airtel, both good set of numbers. Bharti Airtel, after a whole host of brokerage upgrades, doing well. Your IT stocks are leading the charge. LTI, Mindtree, Tech Mahindra, Infosys, all of them doing fairly well this afternoon. Hemang Jani is joining us now on the show. Hemang, great to speak with you. Let's start with your take on M&M. Numbers were largely in line, and there was a tax write back which also helped the numbers this time round. Having said that, is it the management commentary and their focus on EV that might be the reason we're seeing this enthusiasm on M&M?
Yeah, good afternoon. So the Mahindra, as we all know, is at an all-time high levels, and I think the numbers were pretty much in line. Market was expecting about 8% kind of growth in the revenue, and 2 or 3 things that we should bear in mind are the recent launch of the company. The compact SUV has received very good response, more than 50,000 bookings just in few minutes time. Secondly, the tractor side, there is a bit of pressure. There is not much of clarity as to how it is going to show overall growth next year. But overall, we continue to be positive on the automotive vertical of Mahindra Mahindra. The only issue is that now that the stock has run up so much, we should let it cool off a bit, should get more clarity post the management con call on what kind of growth overall level they are looking at. And then we should form a broader view on it.
Okay, but 2.6% higher. And granted, M&M is not necessarily the heaviest weightages, but it's certainly packing a punch. I think what is also doing so well is IT. Hemang, does what happened in US yesterday swing the pitch on IT stocks a little bit, or is that at best a trading move that we're seeing today, not just in India but across Asia?
So, Niraj, I think very little correlation between Indian IT companies and what's really happening in US IT space per se. Of course, there is some sentimental impact because of the overall markets doing so well. So I would consider IT as if you're really looking for something which is very stable, not high risk kind of a bet, then one should go for large cap IT services. But beyond large cap, within the mid cap and the small mid cap companies, you have enough opportunities. Be it Naukri, where you have a very good outlook that has come through. Latent view kind of company is doing pretty well. Protein is something that we like, which is more into the IT infra side, India focused company. So we should be focusing more upon the niche plays within IT rather than trying to get into something which is just not perform. where the growth outlook is not so great, because that could be a dead cat bounce.
Yeah, but viewers, keep in mind, I think what's happened with regards to the move on the rates, the DXY, the yields and the dollar index has all helped IT stocks across the board in Asia today, and that is a bit of a follow-on effect that we're seeing even in IT services in the session today in India. So that's been a good move, and those stocks are actually piling on the gains, currently trading at nearly the high point of the day. Infosys certainly is trading at the high point of the day, and Infi packs a punch because it's a high weighted stock, and which is why if you look at the point contributors, Infosys now eclipses HDFC Bank as the biggest contributor on the index right now. Rajesh, a word on Infosys or any other IT name, whether tech or ERD, that you like on the charts or the derivative side?
So yeah, Niraj, yes, there is buying interest in most of the mid-cap IT space. I think Coforge is looking very promising from that space. So first I'll discuss Coforge, and yes, we will discuss on some large-cap IT stocks also. So I think the way Coforge is moving up, we believe that this momentum can extend further. This is the fourth consecutive day where stock is making higher high-low formation. So some sustained buying action is taking place. Stock is now filling the bearish gap which was formed recently in Coforge. So our view is bullish for Coforge. We expect this rally can extend to 4850, 4900 kind of zone. So Coforge is buy with stop loss of 4630. From large cap IT basket, yes, there is some buying interest is taking place. I think Infosys, after a brief consolidation of last couple of weeks, I think stock is now giving a breakout of last 3-4 week consolidation range. Now, if his stocks holds above 1440, then possible pullback can extend, and this can extend up to 1490, even 1500 kind of zone. Again, from that space, Tech Mahindra is also looking promising. The way stock is forming inverse head and shoulder kind of formation on daily chart, and already stock managed to be breakout on the neckline. So we believe that if it continues to hold about 1295, Tech Mahindra is also looking promising. We are projecting target towards 1340, 1350 also. So keep stop loss of 1280 to buy Tech Mahindra also.
Himang, what do you think of HAL? I just want to pull out HAL again and see what's happening there. It's really the stock of the afternoon. Fantastic numbers, now up 10% as we speak. Do you think more steam left in HAL, especially if you had to bet on an election play? Defense stocks would presumably be in that list, and HAL in it as well?
Absolutely. I think what a performer HAL has been over the last 1.5 to 2 years. And after this numbers, and given the overall momentum that you're seeing on the defense order inflow, we do think that these themes can play out for another maybe 2 years or 3 years. So HAL, definitely BEL, some of the other railway infra companies are something that we would surely be comfortable buying into, though they have really moved up quite a lot. But I think one should be having a positive view, and if you get a small correction here and there, use those as a buying opportunity. Something like a Timken India, PEML. I think these stocks can give you a very decent upside even from current levels.
Well, going strong though. I mean, some of these names, and which is great to see as well. And just look at the gains at the broader end of the spectrum. I think there is some small, strong moves that are happening in Honeywell automation. So in the morning, we were all wondering why is it that Honeywell, despite having good numbers, has not quite gone ahead and shown some strong gains. I think it's taken some time, but it's now off the blocks. I wonder if a con call added to this or no, but and I'm not aware of it to be honest, but the 17% gains is pretty stunning for Honeywell automation. Now, Yang and then Rajesh as well. ABB, Siemens, Honeywell, almost the same template. In ABB's case, to be fair, the stock did well from the beginning, but Siemens gained traction after a bit and then continued. Honeywell, 17% now. Siemens, in fact, YTD has gained about 98-99%. I mean, do you add on to these names more, Hemang, fundamentally first, judging by the valuations that they are trading at?
Niraj, historically also, when you look at ABB, Siemens, Honeywell Automation, they have always been expensive stocks. What has really worked for them in the last, let's say, 1.5 years is that the order inflow, the margin profile, both has improved significantly. So when you look at a company like Siemens, let's say the growth on a YOY basis is 70%. Then even if the company is expensive, you might want to participate, hoping that this growth will continue for another, let's say, 1 or 2 years. And when you look at the railway-based order inflow and the automation-related inflow, that is on a tear. So I do think that it will be a bit difficult for people to participate, having seen such a big up move. But you should definitely participate in this theme, because at the end of the day, the biggest theme or the sector that really drive the market, if you are not there, then you will not be able to outperform the market. So I think it's important from that perspective.
And Rajesh, come in on this one. I mean, ABB is a 8312. This is live highs for the stock. But ABB, Honeywell, Siemens, would you buy them now? If so, which of the three would you buy?
I think I'll go with ABB. Definitely, one should buy these stocks. The way stocks are moving up and the buying interest is clearly there in the whole segment. So I think that traction is likely to continue. ABB is looking still promising, and the way stock is moving up and the stock is holding the ground across all time frame, we believe ABB can extend its gain towards 8,500, 8,600 in the short term. So I think one can buy this stock with stop loss of 8,200.
All right. I just want to take a second to talk about what's happening in the market right now and perhaps why it's happening. Let me just pull up first the intraday of the Nifty and look at that. It's a sharp recovery that you're seeing. One of the reasons could be what the Election Commission has put out just a short while ago. And obviously, typically you're seeing banks, etc., come back in with their mojo. Now, we told you about the final voter turnout for the first three phases. Phase 4 will still see another update in its voter turnout. And it now turns out that what was expected as a low voter turnout might not be the case. In fact, the Election Commission has put out this data. And this released just a short while ago, less than about an hour ago. Niraj, I reckon that this could be the reason you're seeing the sharp up move in the market, saying that the voter turnout in the first 4 phases is 66.95%. Now, what does 66.95% mean? Compare it to 2019, when you had a voter turnout of 67.4%. That is, in all phases. This is now 66.9% in the first 4 phases. Expect phase 4 to be revised upwards again and with higher numbers compared to the first 3 phases. Now, simply put, if the market was concerned about low voter turnout, that big concern has been extinguished, and this is something we've been talking about for the last couple of days. So you've definitely seen that narrative change and that statement from the Election Commission. And of course, they say that this shows the strength of the Indian democratic system, that you have a higher voter turnout. Remember, states like Andhra Pradesh, again, clocking 80% plus voter turnout. The assembly is also going to polls, same as 2019 and 2014, which was 78%. So you have seen those numbers go up, and that could be one big reason that the market is seeing some comfort.
There's certainly some sharp short covering. The timing coincides, could well be that, because there is certainly that which has propelled the markets higher. I mean, now about 1% for the Nifty, sparkling gains. It's that time of the show when we're taking closing strategies, so we need to do that too. But this is the point. I mean, the difference between the voter turnout of the past, as Tamanna said, versus right now doesn't seem to be very high at all. So keep this in the back of the mind. Rajesh, would you want to come in with a closing strategy? With the markets doing so well, is it a BTST?
Yeah, definitely. List is so long, so I'll summarize with 3-4 stocks. First one is Bharat Electronics, BEL, looking very promising. The way stock is now trading about 235 mark, I think this really can extend. 255 could be the possible target for BEL One can buy this stock with a stop loss of 230. The second stock is Havells. The way stock is enjoying its all-time high trajectory, series of high top, high bottom formation is taking place. Havells one can buy for upside target of 1800 to 1820. Keep your stop loss at around 1740. Third stock is from cash segment, that is Ahluwalia Contract. Again, the stock is showing a strength to regain its all-time high trajectory. The way stock has moved up, we believe that Ahluwalia Contract can continue furthermore upside. 1250, 1260 could be the next target for the stock. One can buy this stock with stop loss of 1170. And the fourth stock is from automobile space, that is again Ashok Leyland. Stock again trading at all-time high trajectory. We expect this momentum can extend further, and 214, 216 could be the next target. So Ashok Leyland is also buy with stop loss of 202.
The bearing stocks are the other ones. I mean, SKF is, thanks of course Rajesh for that. There are 4 names because you can choose from any one of those, but yeah, the last one being Ashok Leyland of course. But look at SKF, look at Timken. Yes, off the highs of the day, but still up 6.5%. Mind you, SKF is not a cheap stock either. Timken too. I think if you pull up this week's chart of Timken, 3 days out of 3, if I'm not wrong, the stock has had some gains. So some very strong moves coming in from the bearing companies too. And by the way, the results for some of those, SKF in particular, was a fabulous set of numbers. I wonder if Schaeffler has gained some bit as well. Timken this week is up 24%. Schaeffler is up 7% in today's session. So something's happened there too. I wonder if this is all capex beneficiaries doing well here, because clearly the bearing companies are certainly the thick of things. Hemang, any thoughts on what could have changed here? Yes, the results were good, but coordinated action on some of the bearing companies today.
So Niraj, we have to understand that these are the companies where the floating stock is limited. Okay, either there is MNC parent, or you have a very small retail or institutional participation. Not only just the numbers. When you look at the growth and the order inflow guidance which is coming through, whether it's Timken or Schaeffler and a whole host of companies, particularly the companies which are supplying to the railways and defense related sectors, that is where we are seeing the maximum momentum. So I think that is what is driving the stock price, and what I am encouraged most by is the kind of margin improvement that we've seen for some of these companies, about 250 to almost 500 basis points, which we have never seen in many years. So I think if this momentum continues, operating leverage can kick in a big way, and which is what is probably driving this re-rating.
All right. Just as we wind down to close, just what an astonishing turnaround in this market. And I just want to pull up the sectoral indices to see what is leading the charge. Clearly, M&M is a great story. Great timing for the stock as well, and management commentary that has really helped. The Nifty reality seems to be going very, very strong. IT stocks are still, enjoying the boost that we saw from US markets overnight. PSU banks are still down, but relatively have improved. Bharti Airtel, another exciting sort of stock that we're seeing today. Hemang, are you gung-ho about Bharti Airtel?
Yeah, so post the numbers, what has come out very clearly is that now the entire earnings, would be driven by the R2 growth and the price increase, about 15% or so. And as the management is saying that the large part of the capex is behind, that should be positive. And to my mind, that would be good news for the telecom sector. So Bharti definitely would be the top telecom, the holding that one can have. It has run up a lot, but I do think that it would be important to have that as a part of the core portfolio.
Shorts would be suffering today. Looking at this sudden turn in the market, it's just astonishing what we've been seeing happening, and across the board, you're seeing a fantastic sort of turnaround story. I just want to see what's happening with the real estate pack, and Oberoi Realty leading that charge, 9% up now, doing absolutely fantastic. And I'm wondering, Hemang, if this is a stock that you're tracking?
Yeah, Oberoi again delivered very good set of numbers, and what is interesting is that some of the post the con call which the company had just yesterday. So what has come out is that they will launch the Pokhran road project in early October. There is a fair bit of expansion that we are seeing in terms of the new launches, outside Maharashtra also. So people are enthused by that.
Tex Maco, I just want to pull up both those counters and see what they look like they're closing the day at. Both had numbers come in over the last 24 hours. Titagarh up about 9.5%, 10%. Let's see what Tex Maco is doing. Also, not bad at all, 6.5%. So the rail pack also firing. Rajesh, any of these on your radar?
So Tamanna, Titagarh wagon is looking promising. The way stock is again, managing to cross its previous swing high. So almost now stock is managing to give breakout of January 24 high. So the way stock is moving across all time frame, we believe that Titagarh wagon can continue. 1350, 1400, we are projecting target on a positional perspective. So one can buy and accumulate this stock with stop loss of 1160.
Titagarh is definitely one that looks interesting as well. LIC Housing Finance is the other one I wanted to pull up. Good set of numbers being rewarded by the street. Hemang, you have a constructive view on LIC Housing?
Absolutely. I think this year the company has given a very strong loan book guidance. The margin part looks quite okay. The company is relatively attractive versus some of the other, housing finance companies. So we have a positive view on LIC Housing, along with the fact that, some of the banks which have a very high component of the housing loan portfolio should also do well. Something like Axis Bank or ICICI Bank for that matter. They should also do well in the current scenario.
Okay, Hemang as well as Rajesh, much appreciate your time, gentlemen. Thanks for being with us. But I must say, compared to what we said at the start of the show when we showed the heat map, a lot more red, very little green, a lot of stocks in the red, the market's trading flattish. It's turned around quite splendidly, presumably on that voter turnout piece, because the timing just coincides so well. And as Tamanna said, that the numbers are now looking a lot more stable on the voter turnout. But be that as it may, just reporting the numbers for what they are, get the heat map up on the screen, you'll probably see a lot more red, a lot more green. As you can see, 4 rows of green. And the stocks which are losing out are not losing out too much now. Yes, Maruti is sulking. But aside of that, SBI is just about less than 1%. The others like Tata Motors, Power Grid, etc. are hardly down. Adani Enterprises was down 1.5% an hour ago, just down about 0.5%. And then you look at the gainers, Mahindra Mahindra is closing in at the high point of the day. This is beautiful. This is what Airtel did yesterday. Trending stock ending at the high point of the day usually works beautifully for stock the next day. There is strength in Bharti Airtel yet again. LTI, Mindtree, Tech Mahindra, Infosys all doing well. HDFC Life doing well. It's just, Tamanna, I can just keep on naming stocks. HDFC Bank up 1.5% is obviously adding its punch as well. And I presume, Tamanna, that this now would be the top contributor along with Nifty to the index gains today.
Yeah, I want to see the advanced decline chart and how that has completely turned towards the end. This portion is what has changed the entire story. And we're putting it down to what we started the show with, where we talked about that 66.94% number that the Election Commission has put out, saying that the voter turnout was not low as expected. And since the street looked at it as an indication of election outcome, perhaps that's what's changed. I want to just pull up some complete stunners today in trade, and HAL should be one of them on top of that list. HAL, fantastic numbers, looking like it's closing 11% up. And HAL is truly not the only one. Let's just pull up the S&P, the BSE 500 gainers and losers, and you will see a market which is completely, changed its mood. Oberoi Realty, second day in a row. Yeah, numbers were good. Con call numbers out yesterday, but this kind of a turn for an Oberoi reality as well. Honeywell Auto is
but
one
came
that
off,
Niraj came
Honeywell?
off. Slightly.
From
slightly.
17% to 8% now.
I mean, Niraj, 8% is not bad.
Relative to 17.
yeah. So, I mean, Bandhan continues to sulk. Bandhan, Canada, all of those continue to see that kind of pain. But yeah, HAL, the big story definitely of the day. And the way it's responded at the end of it, Hitachi Energy is one that I want to pull up as well. Hitachi Energy sort of has slipped under the radar, but that's a stock that has been doing well for the last several sessions. That's come off its highs of the day, but they're also 5% up. They've announced a $1.5 billion investment over the next few years, and that is one stock that has been gaining over 200% in the last 1 year or so. At Titagarh, I want to talk about Texmaco. Your rail stocks are also buzzing once again before the election season sort of closes off. And that theme very, very visible, isn't it, Niraj? When you talk about the turnaround story, just let's pull up the Nifty PSU while we're at it to see if there is a change in mood there compared to what you saw a short while ago. Because that was an index that was...
The PSU Bank Index was the worst performing index. I wonder. Tamanna, you're right. I mean, PSUs per se have done very well.
Yeah. With a HAL and a PFC, they're, doing the heavy lifting. Yeah. Gail, bad numbers. And that's why you're seeing, and truly bad numbers, 2.5% down over there. But yeah, it's all about HAL.
Yeah, just before we wrap, the PSE Bank Index, if you can bring up the PSU Bank Index, because that was deep in the red when we started the show. And we just get that up before we wrap up the show.
Still in the red.
But has recovered half of its losses.
Yeah, but Bandhan, Can Bank, all of those still really bleeding. So that's a different story going on. The overall mood, though, definitely changing. Niraj, you've been predicting since Monday that it's going to have a nice TGIF end. Friday is going to have a good end. Thus far, let's see what happens tomorrow morning. And remember, it's going to be interesting as well because you have Friday come just before another crucial session, a crucial phase in the elections, and Mumbai will go to vote in phase 5. So we'll be back tomorrow with everything that you have to look forward to.
Please don't go on a holiday. Go out and vote on Monday. Mumbai curse.
You anyway have to. Saturday there's a special session of NSE.
Perfect.
So at least for that special session, stay tuned. Okay. But for now, that's all the time we have from Niraj, me and the entire team that put together India Market Close. Thank you so much for watching. Stay tuned. A lot more on the other side on NDTV Profit.